As politicians await election results, one major problem they'll have to solve is what to do about the ongoing financial hurricane in the United States. Just today, the Federal Reserve announced its new plan, highly anticipated or heavily feared, depending on how you look at it, to revive the economy. RT Financial correspondent Lauren Lister joins us from New York now to tell us about quantitative easing Part 2. So, Lauren, on the surface, this looks like it's good news, but is this good news or bad news?
Depends on who you're talking about. If you're talking about average Americans who are struggling, whose situation has not improved after the first round of quantitative easing, which saw the Federal Reserve's balance sheet go from $850 billion to $2.1 trillion, lowering interest rates, pumping cash into the economy, presumably for banks to lend to average people that need help, that need money, that need cash. It hasn't helped these people. Credit remains very tight for average Americans, and economists I speak to say this next round of quantitative easing, the sequel, as some have called it, doesn't have any indication that it will do any more for those average Americans. But if you're talking about big corporations who have definitely benefited from the access to cash, which they've used to invest all over the world, or if you're talking about investors who are selling their bonds back to the federal government at a higher price because they were anticipating this buyback or have knowledge of the buybacks, then it's great news. Or if you're talking about the federal government who benefits from these low interest rates, the record low interest rates, which are a direct result of Fed policy, of monetary policy and quantitative easing, the federal government completely benefits because they are the largest debtor nation in the history of the world. And they're paying a very low interest rate on that debt, a very low interest rate on what other countries, the debt that they've bought from the U.S., of U.S. Treasuries.
Right. So why is the Fed doing this? I mean, the government has talked about stimulus all the time, but obviously it hasn't happened. Is the Federal Reserve finally doing what the federal government won't do?
That is a good argument. You know, what a lot of economists I've talked to have said is that really the Federal Reserve is doing what the federal government should be doing. We've heard everyone from Nobel Prize winning economist Paul Krugman to a long laundry list of others say that the federal government needs to spend more. There needs to be more stimulus because the consumer confidence is low. Consumers are not spending, so the federal government has to help fuel this recovery. But we know, Priya, we've been reporting on politics, on Washington, on what the sentiment is, and stimulus is a four-letter word. Okay, no way is Congress going to approve another stimulus. Politically, the federal government's hands are tied as far as stimulus. So what people are arguing is that the Federal Reserve is essentially doing what the federal government should be doing by printing money to stimulate the economy. But this is at a much higher cost. Okay, this is $600 billion on top of already a balance sheet of $2.1 trillion, which is really affecting the global monetary financial system. We've seen a currency war basically unleashed, or currency tensions, however you want to describe it. And a lot of that comes back to the fact that the U.S. is printing trillions of dollars, devaluing its own U.S. dollars. Money is flowing into these other countries that have to protect their currencies from going up because of this flow of capital. So you're seeing a huge consequence of Federal Reserve policy. Okay, this is not just a casual policy. It's a big deal.
And I'm curious as to the timing of this announcement of this new plan. It's the day after the midterm elections. Any indication as to why right now?
Well, I don't know. That's a tough question to ask because this was something that was anticipated. For months, people have been anticipating that after this Federal Reserve meeting that they would announce quantitative easing, and it was just a question of how much and them officially, announcing it. But people had been expecting it. But definitely they're benefiting if they didn't want this news to be picked up as broadly as it would be. It's not a slow news day. Everyone's covering midterm elections, so it kind of gets hidden in the shuffle of that other news. So it kind of depends on how you look at it. I don't know exactly if it was intentional, but who knows?
Yeah, I guess we could speculate for a while, but it's certainly some bigger implications resulting from this new plan. That's our financial correspondent Lauren Lister reporting from our New York studios.